Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Okay, it is October 1st, 2025. Red September, that month that always seems tough for digital assets. Well, it's finally done. But we're kicking off Q4 with a pretty major political event, another U.S. government shutdown. And that's really the core conflict for our deep dive today. It's fascinating, isn't it? This established political mess clashing right against this huge, almost defiant confidence in the markets.
Yeah, defiant is the word. What's really striking is how the market just refused to panic. Usually you'd see a flight to safety, right, to traditional assets. Instead, we're seeing this massive rush into risk assets, specifically crypto. So our mission today, using the source material we have, is to really analyze how Bitcoin and the whole crypto market reacted right away in the hours after the shutdown news hit. We need to contrast that with history, understand the thinking behind this institutional divergence, and figure out what this paralysis actually means for regulation and, global tech stuff going forward. And we absolutely have to start with the number that just sums up this defiance. In the last 24 hours alone, get this, a stunning $1.09 billion flowed into crypto ETFs. Just think about that, $1 billion. Pouring into regulated crypto products the moment the U.S. government essentially locks its doors. I mean, that's a huge shift from the usual fear metrics, isn't it? It really demands we dig in.
Okay, right. Let's unpack the politics first, just briefly, because understanding why it shut down helps predict the impact,
Yeah, makes sense. So the immediate trigger, we know it's a high-stakes fight over money. The sources are saying the core disagreement is about a massive $1.5 trillion in spending. That's what needs resolving. And the current White House, the Trump administration, they've been very quick pointing the finger at the Democrats.
Right. And according to the claims the White House is making, the deadlock comes down to Democratic demands for spending on, well, specific things. They mention subsidies for what they term woke public media, taxpayer benefits related to immigration disputes, and also funding issues around rural hospitals. The administration's line is that these demands are putting critical funding at risk, veterans, seniors, law enforcement.
And we should definitely note for you, the listener, that our sources are reporting the claims and the positions from the White House perspective on this political fight. Our focus here is really on the market's reaction to this whole structural failure, not the political back and forth itself.
Yeah.
But this administration does have recent history with shutdowns. We have to remember the last big one under Trump back in late 2018.
Oh, yeah, that was a big one. It dragged on for 35 days, didn't it?
Right.
Right through the holidays, December 22nd, 2018, into late January 2019. And comparing it to that really sets the stage for why today's market reaction feels so, well, different, shocking even.
Absolutely. Okay, so let's jump right into the data now. This is as of midnight DC time, right when the shutdown became official. The initial reaction, surprisingly, quiet. The global crypto market cap, it dipped marginally, just under the $4 trillion mark, sitting at $3.99 trillion.
And Bitcoin itself barely reacted. It was around $114,340. That's down like 0.08% in 24 hours. Tiny. But it's still up over 2.3% for the week. Basically, the price is just consolidating, holding steady between $113,000 and $115,000. It's acting like a totally normal day, not, day one of a government crisis.
Okay, but wait a second. If those ETF inflows are that huge, $1 billion, why did the price barely budge? I mean, shouldn't $1 billion flowing in cause more than a 0.08% ripple? Does that maybe suggest that the big institutional money is just soaking up retail selling, keeping things stable rather than driving a real rally?
That's exactly the critical point here. That institutional money is acting like a massive stabilizer, a demand floor. It's absorbing any panic selling, any FUD. And look at the breakdown of that $1.09 billion inflow, because it tells a story about institutional thinking. Actually, Ethereum ETFs got the biggest slice, $547 million. That suggests some serious diversification is happening institutionally. The momentum in ETFs looks really strong right now. Bitcoin ETFs were close behind, though, $522 million.
Right, and that really highlights how different the market structure is compared to 2018. Back then, during that last shutdown, crypto felt like this niche, super volatile thing. Now, you've got giants like BlackRock, their Bitcoin ETF, I bet, holds $87 billion already, plus Vanguard, Fidelity. They're all deeply in. They aren't panicking and pulling out. It looks like they're using this political mess as a chance to buy more.
And it fits perfectly with that historical pattern we always talk about, the October flip. Red September, it's historically tough. Bitcoin averages like a negative 3.8% return since it started.
But October, totally different story. It tends to flip the script, right? Averages around 20% returns historically. It's closed positive in 6 of the last 10 Octobers. So the big players, they're clearly betting on that trend repeating. They seem to see the shutdown as just noise, a temporary hurdle, not some fundamental crisis for crypto.
Exactly. And the whole macro picture is basically the opposite of the 2018 shutdown. Back then, remember, we were deep in the crypto winter. Big names, like even JT Morgan, were loudly criticizing crypto, total detractors today. Those same firms are advocates, or at least participants. And crucially, the Federal Reserve Board, they've signaled they're looking to reduce interest rates. A weaker dollar generally helps Bitcoin, right? It reinforces that narrative of Bitcoin as a hedge against fiat instability.
Okay, so that explains the short-term calm, the stability. But the shutdown does create real long-term problems, doesn't it? Especially for the crypto industry itself. The policy side relies on Washington actually working.
That's a really important question. What are the actual tangible downsides for the industry here?
Well, the most immediate thing is regulatory progress. Just stalls. It grinds to a halt. Crypto regulation work in D.C., it'll definitely seize up. Non-essential government functions stop. That includes things like routine reviews at the SEC, public comment periods. All that stuff needed for rules clarity just slows way down.
Which means delays for all those altcoin ETFs everyone's waiting for.
Yeah, precisely. Our sources are suggesting that those pending applications for ETFs based on Solana, Litecoin, XRP, those kinds of assets, they're very likely facing significant delays now. It's not like they're being denied outright. It's more bureaucratic limbo. The government isn't saying no, it's just saying wait. indefinitely, which is almost worse if you're trying to plan.
Yeah, beyond just crypto regulation, there's the issue of market blind spots, right? This impacts the whole global economy. Yeah, absolutely. When the government shuts down, that vital flow of economic data just dries up. Think about the Bureau of Labor Statistics, data, unemployment numbers, inflation stuff. The Fed relies heavily on that to figure out the economy's health. If that data isn't updated, it creates real problems for the Fed's next big meeting, the FOMC meeting later this month. How can they make good policy decisions without reliable inputs? It chips away at confidence and adds genuine risk.
Okay, and just when we thought things were stabilizing on the supply side, there's that Mt. Gox situation still looming at the end of October.
Can't forget about Mt. Gox. Yeah, that restructuring plan, it's scheduled to kick in October 31st. That could potentially release a pretty significant chunk of Bitcoin back into circulation. And, basic economics usually says more supply, same demand, price goes down.
So what's the argument for why it might not tank the price this time? Is there one?
Well, the counter argument is just the sheer scale of institutional buying we've been talking about. The demand coming from these huge financial players through the ETFs, it might just be strong enough to completely absorb that extra Mt. Gox supply. Something that used to be almost a guarantee of downward pressure might now meet this massive constant buying force. It's really the big tension in the market right now, a potential supply shock versus this relentless institutional demand.
Okay, so it seems clear the market, especially the institutional side, isn't really waiting for Washington to sort itself out. They're treating this political chaos almost like background noise. So let's look outside the U.S. for a minute. Where is the real infrastructure for this decentralized future actually being built? Our sources highlight some huge developments elsewhere.
Yeah, definitely worth looking globally. Let's start with a big shift at Ripple. David Schwartz, who's been their CTO for 13 years, a real OG in the blockchain world, he's stepping down from that main role, says he wants to focus on family and personal projects.
Wow, that's a significant move for Ripple, one of the cornerstone companies.
Yeah, it is. He's not disappearing entirely, though. He'll become CTO Emeritus, so still advising. And interestingly, he's joined the board of Emeritus, which is a big edtech company focusing on online education. Seems like a strategic shift, maybe towards impact projects and family, while keeping a hand in at Ripple.
Okay, next up, there's a really interesting development in asset tokenization. It shows how fast finance is moving, kind of regardless of what Washington does or doesn't do.
Right. Anthony Scaramucci's firm, Skybridge Capital, they've got solid plans now to tokenize $300 million worth of their hedge funds. And they're doing it on the Avalanche protocol. What's key is they're using the ERC 3643 standard. That standard is specifically built for compliant, permissioned tokenization. So it lets them keep regulatory controls while also, boosting transparency, liquidity, making their funds easier to access.
$300 million.
Yeah.
That's a pretty serious vote of confidence in tokenized assets.
Yeah.
And speaking of serious confidence in investment, let's pivot to the Middle East. The tech acceleration there is just incredible right now.
It really is staggering. First, Saudi Arabia's AI ambitions. There's a South Korean AI chip company called Rebellion. They just closed a $250 million Series C funding round. That puts their valuation at $1.4 billion. And they're not just partnering from afar, they're actually expanding into Riyadh, setting up a subsidiary there. The focus is deploying their chips across Saudi Arabia to help build out the kingdom's own AI infrastructure fast.
And then there's the UAE, specifically Abu Dhabi, setting this incredibly ambitious goal for digital government. It kind of makes some Western efforts look slow.
It really does. Abu Dhabi is aiming to be the world's first fully native digital government, and they want to do it by 2027. This is being led by their Department of Government Enablement. We're talking a huge investment, $13 billion between 2025 and 2027. Key parts include going 100% cloud, digitizing 100% of their processes, and creating over 5,000 new government tech jobs. It's super aggressive. It really positions Abu Dhabi as a leader in future government models, and it shows other global players aren't waiting around for DC.
Okay, so let's bring it back home and zoom out to U.S. context again. What we've seen is, yes, some immediate volatility maybe, but mostly this record resilience in the crypto market. And that strength seems driven by that institutional confidence we talked about, maybe some historical October optimism, and a Fed that's not tightening anymore. It seems almost decoupled from the political mess in Washington.
Yeah, the key takeaway structurally seems to be that this institutional buy-in is acting as a really strong demand floor. It's absorbing these political shocks, the bureaucratic slowdowns, the regulatory delays from the shutdown. They're annoying, They're frustrating for the industry, for sure, but they don't seem to be fundamentally shaking price stability, and that's a totally different situation from previous shutdowns, isn't it?
It really is. So what does it all point to? I mean, the big question this whole situation throws up goes right back to Bitcoin's origins, its core philosophy. Given how the market's reacting to this political crisis, big institutional money rushing in, prices holding firm or even rising while the U.S. government literally grinds to a halt, is this maybe the beginning? Are we starting to see Satoshi Nakamoto's original vision play out? The real separation of money and state.